Mr. Sanjay Malhotra, the Secretary Revenue of the Ministry of Finance, will shortly be joined by Shri Vivek Jory, the Chairman of the CBIC, and Mr. Nitin Gupta, the Chairman of the CBDT. They're just on their way. They're just joining us, officials from the Ministry of Finance. We have also here, as you can see, Rajiv Mebani, the Chairman of the CIS Taxation Committee. Very good evening and a very, very warm welcome to all of you. And a very special welcome, if I may, to Mr. Sanjay Malhotra. Deeply appreciate your participation today, and we know that we have to be bang on time and let him leave on time so that he can take the flight which he needs to. And actually, you know, I was just recollecting, soon after you took over, you met industry. You met industry before the budget, and we had a very warm and a very deep yet very simple way you sort of interacted with the industry. And soon after that, of course, you know, it was just a few months before the budget that you took over, and it was complete. Please come. Welcome, Mr. Gupta. So we had a fantastic meeting that time with Mr. Malhotra, and the type of interface that we saw between the government and the industry has always been very, very, very encouraging. And of course, with also Mr. Nitin Gupta, he has been very, very responsive on many of the industry issues whenever we have brought it up to him on direct tax issues. This group, you know, today we have some of the large corporates here, they're tax heads, they're tax experts. We have quite a number of MSMEs also in this group, some of the startups as well as unicorns also. So we'll like them to have some questions or comments to you, both of you, and also to Mr. Jory when he joins. But I would be amiss if I do not start by really congratulating the budget team under the finance minister. And of course, the key part of the budget is always tax. So this is the crack team, like the way we say. And it's indeed very, very important to the industry that you give this space to engage yourselves with the industry. I quickly talk about a few points and then 3 questions maybe. You know, much that we had requested you for in the budget, we have seen it. One, of course, the fiscal glide path, which you have adhered to, which was something that we have been asking for. And also, parallelly, we asked for CapEx, and that also came up very strongly. So we really wanted to appreciate that. And third, this entire issue that we had talked about for the first time after many years on personal tax. We've never ever talked about it in the last maybe many years. And for consumption demand boost, and you really listened to it and brought in your dimension, which was so very important for us. And fourth, of course, the emphasis that we saw on the fiscal, financial sector, building the green economy, push to technology, digitization. Those are some important areas that we saw. And I must stress upon the quality of the government's expenditure, which is so very well brought out in the budget, and some of it, the government borrowing to be used in the CapEx more than the revenue expenditure. I think that's a very important point that that we saw the quality of the fiscal deficit. And the finance minister, when she was speaking, she emphasized on that quite a few times. Also, one point I wanted to say, and that's last in terms of a comment, is that how do we increase the tax base? Today we are still 11.1%, and to go to a 14 to 15%, which is the global average, this will really be going a long way for us. And I think one of the things will be formalization of businesses, which you all, of course, alluded to. Sir, I would also like to put up 3 questions on behalf of this group for your indulgence. One is, how do we increase the savings rate? And would the new tax regime really encourage savings? Second, another point that we have been talking about, there was a request that we had made about the lower corporate tax for new manufacturing investments, that if that could be extended for 2 years. You must have good reason for having not done that, which was done for COVID years, but would that be considered at all post the budget in any way? And third, the budget numbers show fiscal consolidation being achieved even though the revenue targets set for the next year are not very overambitious. In fact, as I mentioned, the gross tax revenue as a percentage of GDP will still remain probably around 11%, 11.1%. So your comments on what I said about how do you plan to really increase that and widen it. So with that, I'd like to really once again welcome both the Revenue Secretary as well as the Chairman CBDT. And as I mentioned, Mr. Jory will soon be joining us. But ladies and gentlemen, I'll now leave it to Rajiv to really make another couple of points on behalf of the Taxation Committee. And once again, very, very warm welcome to you both. Thank you.
Thanks, CB. And very warm welcome to you, sir. And let me add my compliments to you and your entire team in CBDT and CBEC for really an outstanding budget. And as I would say, very credible set of numbers, very consistent in its approach, and very high quality, as CB mentioned. CB, I think the numbers are realistic. I don't think they are conservative. We are projecting for 3 times the global growth. I think this year, based on at least the RE numbers that I've seen, the tax buoyancy would probably be slightly less than 1, mainly because of excise duty and other things. So taking an assumption of 1 of tax buoyancy in a very volatile world, I think is a very realistic, and I must compliment. There's always a temptation, during these election years to push other things, but I think the must compliment the team and the government for staying away from that. From a positive standpoint, as I said, sir, the consistency and stability in tax rates, I think that's a big positive, because I think now there's no sort of real stress at the time of the budget that things may change significantly. I think welcome, sir. The new tax regime, and we did an analysis of globally around the world, and India probably has the largest numbers of concessions and deductions in personal tax as compared to other parts of the world. So I must compliment you that you are continuing with both regimes. People have the flexibility. They can either go for one regime or the other regime. So it's not, the direction is very clear, but the change is being made in a very modulated way. So, and I think the swing factor, sir, is going to be the HRA. So your assumptions, as when we did an analysis of almost 100 people, and really depended on the fact whether they took HRA or not, whether they went into one scheme or the other. And the other thing I would say on the CIT, on the appellate side, CIT appeals, where you've got in 100 joint commissioners, 80% of the outstanding cases are at the CIT appeals level. So if we can unclog that, I think that will be a big positive. A few issues, sir, I wanted to raise. The first was around angel tax on non-residents. I think this issue has been probably raised in every session that you've gone, but I just wanted to bring it to life a little bit. I think the reasons why you've introduced it are very clear. There are some people who are misusing it, and you want to definitely find a way that is got in and that is caught. But today, sir, last year we got in private companies and unlisted companies, we got in roughly $30 billion of investments last year. The year before that, that number was $45 billion. Half of them came in the startup ecosystem, and half of them came in manufacturing companies, in technology companies, in companies that are making shoes, electronics manufacturing, et cetera, et cetera. So, and the question is, if I look at the FEMA rules, the FEMA rules prescribes that this should be the minimum price at which it can be, the shares, they define the minimum price. And the tax rules define the maximum price. And if you go above that, then you have to pay taxes. So typically, if my fair value is 625, If I'm getting at 624 rupees, I'm violating FEMA. And if I'm getting at 626 rupees, then I'm violating tax. So you also know how, I mean, in the sense it becomes taxable income. And you also know, sir, in a very volatile world, it is very difficult to predict what that rate fair value is. And at the end of the day, if someone has invested $500 million or $50 million or $100 million, if an income tax assessing officer with all the right intentions after a year and a half, 2 years is going to assess whether that is fair value or not, and if in his judgment it's not fair value, you will have protracted litigation for almost 8-10 years of a very significant amount. So therefore, sir, our request will be if you were to build some protection around it so that it doesn't discourage foreign direct investors or it doesn't pose a risk there. For example, maybe 15-20% of variation. We have the principles of GAR. This is also like an anti-avoidance. It's like a SAR, it's specific anti-avoidance rule. If we can apply the same guardrails that we have in GAR to this, where first it's escalated to 3 people, a committee of 3, I think that will be very helpful. You did mention that startup company. I read your interview in the Business Standard that almost 8,000 companies. But sir, in the current context, though that exemption is only to the extent of 25 crores raised. It's not for domestic resident investors. So I don't know what the intention is, and the ecosystem here is much wider than domestic. The second point, sir, again, has been raised on the REIT and InvIT. I think the loophole that you have plugged is absolutely right. I think it was being misused. So I think you've done absolutely the right thing by plugging that loophole. But the only request, sir, will be that when the redemption of unit holders happens, when the redemption of units happen, in all the sections of income tax, the redemption of units is capital gains. After netting off the cost of my units, it's capital gains. Right now, you have categorized that as income from other source. So in all the other cases, redemption of units, repayment of debt, you're absolutely right. I think that should be income from other source. But redemption of units, if that can be treated as capital gains, because that is the nature of that income, and that's the way it's been for mutual funds, for equity funds, for debt funds, redemption of units is treated as capital gains. The third thing, sir, on LRS, and we've heard your views, and I agree with that, but I just wanted to present a slightly different perspective on that. Sir, today we are the 5th largest economy. We have more than $500 billion in foreign exchange reserves. There are a lot of people today who want to invest, maybe buy shares, in many cases there are, I talked to some of our people, some of the people that I know, some of the people I met here, they have kids who are after their college looking for a job there or have just early got into a job, and they have to make remittances to support their children. Some people are global residents, so they've come here for 3 years. They have some maintenance expenses that are there in their homes or maintaining other things. So these are genuine. I know what you're trying to achieve at, but I think it's a bit of a sledgehammer approach. I know it's just a timing issue, but it does create for a lot of problems, for people who are looking at refunds. It does create some issues. And I fully understand and appreciate the reasons that you've done that. But if there's an alternative way of achieving what you're wanting to achieve, I think that will be great. Just one question I had on the custom side. There was Section 25 of the Customs Act where some concessions were given for manufacture of telephones and mobile phones, and that especially this is PCBA, vibrator motors and others, that it looks like those concessions have not been renewed. They lapse in March 23. So there is a lot of confusion in the industry whether they actually lapse or they will be given later on. So some clarification, will be good. I think it will clarify where things stand. I'm sure a lot of people have other questions. CB is showing me eyes, so I'll pause here, sir, and we'll wait for the other questions. But I would only say as we move forward, sir, for next year, the few recommendations that CII had said, which was rationalization of the TDS regime, rationalization of capital gains, the big focus on dispute resolution. If in the next, these are complex issues, we understand, but in the next 1 year or so, if we can work towards that and make some of these simplifications, I think that will go a long way in making the taxpayer's life much more easier, and at the same time will enable compliance. So once again, sir, on behalf of everyone here, thank you very much. And CB, I'll hand it over back to you.
Thanks so much, Rajiv. May I request you, sir, for a few initial remarks, and then we'll open it up to a few questions. Thank you.
Well, good evening to everyone, and thank you for this opportunity and the warm reception, compliments. It's indeed, a pleasure to be here amongst all of you to share thoughts. So the effort really, in the budget exercise, and especially so, from the taxation point of view, has been to keep things, as has been stated, stable, to remove, whatever ambiguities are there, so certainty, bring in certainty wherever, there are doubts, and to keep things simple and rational. That has been the effort, apart from, of course, the ongoing effort of simplification with not increasing taxes, reduction of taxes. We have seen that happen, in GST. We have seen that happen on the corporate tax side. We reduced taxes from 30% to 22%. And now, even on the personal income tax regime. So very much the focus is and has been on reducing the taxes, widening the tax base, and deepening the tax base. And we have seen good results thereof, whether it is in GST's huge buoyancy in GST, huge buoyancy even on the corporate income tax, this year, and even on the personal income tax, there is good buoyancy, especially this year. Of course, as mentioned, tax to GDP this year, the last year, it's been more or less the same, but that is, we have to keep in mind, we have also slashed rates on corporate taxes. So despite that, if we are able to maintain the tax to GDP ratio, that is all because of the widening and deepening of the tax base while reducing the tax rates. GST also, we have actually did a study, the rates have not actually gone up as against the revenue neutral rate that was forecast to be about 15.4% or so. The effective rate is about 4% less. So that's the broad theme, simplicity, certainty, to reduce litigation and ambiguity, and stability. These are the three themes, along with, as I said, expanding the tax base without actually increasing tax rates. I'll come, straight to the questions that you have, some pointers that you have given us. Savings, one thing you asked about savings. How do we increase savings? Savings today are about 27 to 30% of our GDP. And there are few schemes which have been announced in this budget, especially, for the senior citizens and for the women, that will help the country in improving our savings rate. Is a question which is asked often by many, that we are trying to move away from this exemption-free, with exemption taxation system to without taxation system, and what effect it will have on savings. I would just like to point out that the market will, we have, for one, government has introduced these 2-3 schemes. Expanded the scope of 2 schemes and introduced 1 scheme. And then on the other hand, the market will certainly, recalibrate and find the right levels and make it more attractive for people to save so that the country has enough money to invest. Having said that, I would also like to point out that the that the savings through the tax exemption is actually a very small proportion of the total savings of our country, which are about 25 lakh rupees for the households, 25 lakh crore rupees, of which savings through these tax instruments are only 4 lakh crore rupees. So we should not feel, that people are, now investing even otherwise. I mean, I also did, a kind of a survey, asking people, and they would continue. It's not, as if all of them are not going to now save because the tax incentives have been withdrawn. Extension of the other thing raised was extension of the concessional tax regime. And I said it, in an interview one day that we had announced that there will be a sunset date. And so the sun should set, if we have announced a date, then it should set, on that date. So it brings in, the certainty that we all talk about, not expecting, that every year there will be another year of extension. Tax to GDP, yes, as I've mentioned, tax to GDP we do need to increase, but we need to at the same time keep in mind the fact that while the averages may be on the higher side, ours is still a developing country, ours still, is a middle income group country, and so the tax to GDP, it will not be fair for us to compare our tax to GDP ratio with some other countries. Having said that, of course, there is a need to do that, and how do we do it? We believe that we need to do it by expanding our tax base and deepening the tax base, as I said, and a number of measures we have taken, especially on the direct taxes side. Some 14 measures we have listed in the budget speech. They are there, 14 measures. Some of them have been pointed out by the speakers themselves. And so that should, and we need your support in that. I have said, at other fora that the relationship, that the whole theme and approach has been, on building the trust, on building systems where building systems for the honest tax, keeping, in mind the honest taxpayer also keep him primarily in mind, and not, only for those who are actually being aware, of course, of people, who can misuse the systems, but primarily for those who are honest. Buoyancy, you mentioned about buoyancy. I would just like to point out that the high growth rates that we are seeing this year is partly because of two reasons, apart from, the simplification and the measures and the tax avoidance measures that we have taken. There are two things which we need to keep in mind. We can't hope, to have this 24% year-on-year GST increase. Similarly, even on the direct taxes side, 24% year-on-year increases may not be something that we should hope and expect because of two reasons. One, there is a base effect in this. There is a base effect because last year, first quarter especially, was a COVID year. The second thing is also I would like to mention here that there was a slight increase in GST rates in July. So that has also added to the higher buoyancy in especially the GST numbers. Thirdly, there has been an advancement. The return filing date for the income tax were this time, they were the normal dates, whereas previous years they were much later, they were postponed. So that also has, that effect is there. So we may not have, but we have set for ourselves, as rightly pointed out by you, sir, that the estimates are so very much, on the realistic side. So, and especially given the fact that we have now further reduced the rates for the personal income tax, effectively we have said that we will be losing 37,000 crore, and this is not vis-a-vis, the new scheme, because some people feel, this is vis-a-vis the new scheme and there is no one in the new scheme, and so your estimates are on the basis of people of, the benefits in the new scheme. No, these estimates are on the basis of their taxation in the old scheme with exemptions, and now, they're moving on to new scheme with no exemptions. So we have, if we keep that in mind, the numbers that we have given out is very much a realistic number and not a conservative number, as has been pointed out. Of course, if the GDP, grows at lower or higher than what is assumed, then, these will change. Yes, we agree that there is scope for, reducing the appeals. There is some backlog. There is some backlog. Some measures have been taken, and we would like to work more on it. This is only a starting for us. We will be introducing 100 posts of JCs, so that will more or less increase our strength by 1/3, more than 1/3. We have about 250 to 300 commissioners. So if we have another 100, 80 to 100, let's say, so about 25 to 33% increase. So that will help, but there are other measures on the anvil to reduce this pendency. Angel tax, well, certainly the measures suggested will be looked into. Basically, that's an implementation thing. What we actually did here was that we have tried to bring in parity with the residents, because the residents are already being taxed. And so there was no reason why, the non-residents should not be also be paying a similar tax. And so it's primarily, because of this. There's no other reason not to have this, But yes, we are aware that we have to build our systems, as I mentioned, keeping in mind that a huge majority of our people are actually honest, and so they are not put to inconvenience while, we build our rules and how we go about it, and we don't leave it, totally to the discretion of our assessing officers. Read in which I'll leave it for the chairman to answer. There's a differential treatment that we have given. LRS, much has been said. You see, even, if one is using actually the LRS route, our sense is mostly, even if it is, for expenses of a student, expenses of relatives, to support some people over there, that money is certainly not going from the savings. No one is, withdrawing it from an FD. No one is, selling a property to fund this kind of a thing. And education, medical has been already kept out. So this is basically discretionary spend. Discretionary spend is coming out of, our understanding is, unless there are more, they can be pointed out and we can have a look at those. But this is discretionary spending coming out of taxable income, not from savings. It's from a disposable income which is even otherwise subject to tax. So people are going to, in any case, pay income tax, whether through an advance tax or not. So the question will be, well, in case, they are already paying this tax, then why, have the TDS? That can be the counter question, but then you are aware, there are some people, who don't pay any taxes at all. So the honest people, they don't lose anything, but those, who are not paying the taxes, we are able to get them into our tax net. Rationalization of TDS, certainly, we'll be looking into it. I want to assure the House that TDS is something that we need to look at it, whatever scope there is to simplify it, to reduce the number of TDSs or to eliminate in case there is a need. We'll certainly be looking at that. Dispute resolution, I've already talked about. So it's again an area of concern for us, which we will certainly be looking into. Capital gains, see, we did this capital gains, there will be, some winners, some losers. I mean, obviously, if you do something, we are talking about rationalization, there will be some winners, some losers. So we just, we have just increased the long-term capital gains. There used to be no long-term capital gains tax on equities, which was introduced a few years ago. So we need to give some time to ourselves for the systems, for people to become adjusted, become used to it. And well, if everyone wants certain streams to be taxed at higher or lower, well then certainly, this government, I can assure you, is a responsive government. And it will always, and there are quite a number of measures, I'm sure CII would agree, which have found their place, in the budget, which came, from the suggestions which were given by CII and other organizations like you. So thank you very much. And if we can take, more questions, still, we have time. Thank you.
Yes, please. Yes, please. Yes, yes, please. Nidhi.
I think RS has already covered all the questions. And on angel tax, as he has rightly pointed out, once this comes to us, concerns are being raised, we will examine the concerns and take it forward. Redemption of units, there is some suggestion, and rationalization of TDS, capital gain, dispute resolution, all these are work in progress, partly have been taken care of. Dispute resolution, just what RS has elaborated upon, and the primary reason had been that the accumulation of pendency has been the COVID, then secondly the Vivad se Vishwas, when the opportunity was left out with the taxpayer to utilize Vivad se Vishwas, and thirdly the changeover from physical hearing to faceless, and it took some time for development of systems and processes. We believe that with the renewed emphasis on everything, the position would improve, and we would be able to regain the trust of the taxpayer. You have been supporting us all along, and there has been improvement over a period of time, so that will continue, and that has been visible in the way we have processed the returns of income. We have issued the refunds, and we have been issuing consistently. For the sake of the audience here, we have already issued refunds of 2.6 lakh crore this year by 31st of January, while the entire refund outgo during the financial year 2021-22 had been 2.20 lakh crore. So the buoyancy side which was talked about was about the gross, and because of the higher refund outgo of around 50-60%, the net buoyancy has been around 18%. So that is the target growth rate, and we would like to think more about it. How do we get it? There has been absolutely no pressure upon the taxpayers, I believe, to make the payment of taxes. It used to be at one point in time for advanced tax augmentation or anything. So we are reposing trust and faith in the taxpayers, and we are developing that further.
Thank you. Thank you, Mr. Jory.
So thanks. My job is relatively easier today because I don't think there are too many questions about customs, except one that I heard on PCBA. Now, you're aware that on electronic hardware we've been following a certain trajectory of tariff rate changes, which is that in order to deepen the value addition, we've been reviewing exemptions from time to time, so that if there is domestic capacity for manufacturing a certain subcomponent or sub-assembly, the duty on that is being hiked, and the duty on its inputs and raw materials is being reduced. So I think the removal of the exemption on PCBA would have happened, one, in consultation with METI and the stakeholders, because the entire review exercise was based on feedback we got from the industry, from the concerned ministry, and through crowdsourcing. And two, based on inputs that there is capacity to produce PCBA in the domestic economy, and that's why we would have removed it. So that's one clarification I wanted to give. I was looking at your analysis of the budget, and I was surprised that on the customs side, you missed the most important thing, which is simplification of the rate structure. It doesn't find mention in your compilation, in so many words. So I do believe, and I think all of you will agree with me, that the lesser the number of rates and the a reduction in the rate dispersion definitely speaks to simplification of the rate structure, reduction in disputes and all of that. So that's a very important theme which has been missed somehow. And the other thing which I also wanted to mention is that the review of exemptions is also part of the, our attempt to simplify the rate structure. So the more the exemptions, again, the more the complications in the rate structure. But we've done it with a very broad-based consultation, and that is something that I need to assure the industry about, and we'll continue to do it that way. So some of the exemptions which have been allowed to lapse in March of this year, or some have been continued for another year, it's all been done based on inputs that we've got either from the industry or from the line ministry. So those are just some broad opening remarks that I wanted to make. Thank you.
Thank you. Thank you very much, Mr. Johri. I'll not try to really sum up what the three of you have said, but really thank you and deeply appreciate the very lucid way that you have responded to some of the issues which we have just raised. We'll take the opportunity for the next few minutes. We know time is tight, so move to the floor and get some questions from the floor. And I've already got a few of you who wants to ask a question or make a comment. I'll start with Mr. H.K. Agarwal, the Managing Director of Grasim Industries. Mic over here, please.
Thank you, sir. So, I am H.K. Agarwal, a member of CII's Textile Committee and Managing Director of Grasim, Aditya Birla Group. So, first of all, I would like to compliment the Finance Ministry officials for such a wonderful budget. Very balanced, very futuristic and development oriented. Especially the amount of capital expenditure which has been provided will create a very big multiplier effect, and that should propel the industry and economy to grow. Very balanced, very futuristic, so my sincere compliments. I have a few points to bring to your attention, sir. First point is in general industry. So Indian industry needs to be more competitive. And we have many cases where India has entered into FTA, and the countries which are now exporting goods to India coming at zero duty, whereas the domestic industry is still burdened with a lot of levies in terms of import duty on the inputs, import duty on raw materials. So Indian industry is finding it not a level playing field. So that is making Indian industry very uncompetitive and will not be able to continue to invest for keeping up with the growth in the demand in India. And as a result, there is a huge risk that we will continue to lose market share to overseas exporters. And especially this becomes more serious because China has invested through their offshore units. Yes, sir. Okay. So, and next point I would like to share is on the textile industry specifically. The custom duties and the tariff policy is now skewed in favor of cotton as against man-made fiber. So for example, import duty on cotton is 10%, but import duty on man-made fibers is 5%. So that disturbs the whole textile industry, continue to be skewed in favor of cotton. Similarly, GST throughout the value chain, on cotton value chain is 5%, whether on fiber, on the yarn, on fabric, on garments. Whereas on the man-made fiber, it is 18% on fiber, 12% on yarn, and 5% on fabric. So a lot of GST gets accumulated in the value chain, and value chain then struggles with the working capital issues and refund, and then they are not able to invest in capital goods because that doesn't get refunded, because they are not able to even claim the basic input tax. So these are the 2 points I would like to bring to your attention, sir. Thank you.
Thanks. I'll get a question for the small scale and the co-chair of the CII small scale, Mr. Ashok Sehgal, who also runs the Frontier Technologies. If we can be very sharp and brief with the questions, because we can get more opportunities to others.
Sure, thank you. Thank you, sir. First of all, I would like to thank you very much for the increase in allocation you have done for MSMEs. We very much appreciate a couple of steps you have taken. That is one. The other is the very innovative tax provision you have made, that if somebody does not pay the MSME at the end of the year, he will not be entitled to claim that as a deduction. I think that will go a long way in helping us. One other question I have for you, because I'm sure all the details are not yet out, is that the ECLGS scheme, which has been so useful to us during the COVID times, 5 lakh crores is allocated, and as per the latest numbers, about 3.6 lakh crores has in fact been utilized. There is, so there's a 25 to 30% balance still in that scheme. The scheme is scheduled to expire on 31st March. Is there any thinking that this could be extended because the funds allocation is there, and the NPAs by the MSMEs have not really increased, but people are utilizing the extra credit to be more productive, and that would overall help the economy. One other suggestion we have is on a scheme called CLCSS, which was there 3 years ago, Credit Linked Capital Subsidy Scheme, where if somebody made an investment in plant and machinery and he went into production, a couple of years later, he got a subsidy from the government for having made that investment. A lot of our members feel that that is a very useful scheme, and if some allocation could be made on that, or that scheme could be revived, I think it would go a long way, especially at this stage when we're coming out of COVID times and we're looking at good growth opportunities for MSMEs. So these are a few suggestions we'd like to put before you, sir.
Thank you. The last one on this tranche, if I can take Varun Khaitan, again from the retail sector, co-founder of Urban Company.
Sirs, thank you so much for your audience today and for a budget that's progressive and continues to propel the country on the trajectory forward. I have 2 points. One, on the topic of angel tax, there's already been some discussion, so pardon me if this is repetitive. There was a recent statement by the industry secretary, Mr. Anurag Jain, that recognized startups will be exempt. And I think we completely agree as a startup community with the broader spirit of the angel tax. If this is indeed the case, it will be great if a notification can be issued explaining the criteria for recognized startups. It will really reduce the broader anxiety that is currently at play. The second question I wanted to raise was on behalf of the home services industry. This is an industry that is nascent but rapidly getting organized by online platforms such as Urban Company, HouseJoy, and others. Currently, for housekeeping services such as home cleaning, electrical, plumbing, and carpentry works, platforms are required to collect 5% GST on a reverse charge basis from the service professionals under Section 9(5). These service professionals are individuals, operators under the GST threshold, and in almost all cases, they make anywhere between 3 to 6 lakhs per annum. These services are rendered intra-state, as the industry is growing, platforms are anyways required to deposit 18% GST on their commission revenues as well as on product sales that they make to service professionals. If It's our humble submission that for this growing sector to be supported, if the 5% additional tax on these small service professionals can be exempt, this will be a small impact to the exchequer, which will be more than compensated as the sector grows and organizes through tax collection on the platform's revenue, and it will go a long way in helping these small service professionals and the overall industry. Thank you.
Thank you, Varun. I'll turn to the Revenue Secretary and also to the,
So there was a question about inversions owing to FTA. The fact of the matter is that FTAs that we're doing now, and even those we've done in the past, are very comprehensive in their coverage. So there are very few tariff lines that are left out of the scope of an FTA, as a result of which you have both the raw materials and finished products or intermediates coming in at zero or near zero rates. So while you can make the point that, you know, the MFN tariff continues to be higher vis-a-vis the FTA rate, and therefore there's an inversion, what you have to look at is, one, you know, what is the kind of value addition in that line of manufacture, and two, whether, you know, imports are actually happening at the MFN rate. So if you were to give me a specific example, maybe you can look at it. But the fact of the matter also is that we cannot correct inversions with, you know, between MFN rates and FTA rates. I mean, it becomes very difficult. It's a spaghetti bowl of FTAs, and it becomes very difficult to actually calibrate the rates in that manner. Cotton versus MMF, yes, that's an old debate. I mean, we know that there's a differential in the tariff structure as well as in the GST rates. As far as the GST rates are concerned, you are aware that a decision had been taken. The GOM had made a certain recommendation. There will come a time when, you know, I guess it will get equalized. The last point which I want to respond to is home cleaning services. So I guess you're seeking the dispensation that is currently available to suppliers of goods who are below the threshold, but they're selling them through an e-commerce operator. I think that's the way I picked it up. So what we did in the last, as a result of decisions taken in the last GST Council, is that we've done away with the mandatory registration of these people, which was earlier the case. I think you're seeking a similar dispensation for service providers. And we go back to the council with that suggestion. I think it's already there with us. We're examining it. So those are some of the responses. Is there?
Let me just try to supplement what, of course, you know, he has covered it and made my task easier, but exemptions or, you know, the customs duty, imposition of customs duty for promoting our industry. I think number of industries now today are competitive, you know, on their own. So while, you know, we do recognize, you know, the individual problem that may be there, you know, in some of the sectors, but we have to ultimately, you see, we have to move out of this protectionism regime, and we have to become competitive on our own feet, which we have done, which we have demonstrated to the world. Having said that, we'll, you know, if there are specific things as mentioned, we'll examine this. Something was said about ECLGS and the subsidy scheme. Well, we don't directly deal with it, so, but we'll pass on, you know, your request to the MSME minute and the DFS. But the scheme is still open. See, the ECLGS scheme is still open, as was mentioned, till 31/3/2023. So people can still avail it. People are not availing it. There is perhaps no need, I think, to further extend it, it seems. The other thing we will pass on. Angel tax, you mentioned about angel tax and clarity, you know, on the startups. So there is no angel tax. This does not need a notification because it's already there in the part of the finance bill, and they are exempt. Now, what constitutes a startup perhaps is your question. So all those which are registered with DPIIT, and if there is a further clarification needed, we can again, you know, reach out to DPIIT and provide that clarification for the benefit of everyone.
In the past,
I'll let Mr. Anurag Jain know in case there is, I mean, to my mind, perhaps there is no such clarity perhaps required, but still I'll pass on your request to him. So thank you. Nitinji, you want to say anything generally?
Rajiv?
More questions?
I'll have to leave, so in case you people are, you have time, sometime you can stay. So I'll take, so thank you very much.
Sir, thank you very much. Thank you for spending the time and responding to the questions, and we will get back to you with some of these suggestions in a formal way, sir.
Thank you.
Mr. Hemant Ruya, Group CFO, DP World. Is Mr. Ruya there? Or? Can you please, can someone hand over the mic to Mr. Ruya?
Ruya sir, take the mic, yeah.
Thank you. So first of all, thank you for getting the Saptarishis to guide us into the Amrit Kal. That's really, really welcome. And as the RS said, stability and predictability, which is what a large part of corporate life is all about, is what you all are also delivering. So thank you so much. My question is, it's been nearly now 5.5 years that the One Nation, One Tax was implemented. And despite this, we have to deal with multiple registrations, multiple assessing authorities across states. Is there a timeline by which we can just deal with one centralized authority and one centralized registration? So thank you so much. That's my question.
Preeti Chadha, CFO, K. Raheja Group.
Yeah. Hi. Thank you, sir. I have two questions. One, Mr. Memani has already asked, which is for the REITs and InvITs regarding redemption of units, classification as other income and not capital gains. And sir, the second question was parity with equity. So for the long-term capital gain tax holding period for REITs and InvITs is still 36 months as against equity, which is 12 months. So we've not seen that change in the budget. We'll really be thankful if this can be looked at positively. That's all.
Creepy Singh, please.
Very good evening. I represent one of the startups at the CII National Council, Northern Region and Delhi State. I have a suggestion to make. Can startups be provided with an opportunity to work with government? And when we talk about working with government and its various departments, there are certain criteria when one wants to work with government. For example, when we talk about DAVP, it talks about having a turnover of 50 CR, 100 CR or 500 CR, right? Startups at an early age cannot have such turnovers unless and until they are unicorns. So can this opportunity be provided to startups, which are registered with, of course, DIPP, to work with the government? Thank you.
Thank you. I'll ask one more question. Neetu Gupta from Aviva Life Insurance.
Thank you, sir, for giving us this opportunity. This is regarding the amendment which is proposed in Section 1010D of the Income Tax Act. Sir, the amendment is regarding the maturity proceeds of non-ULIP policies. So we have a set of policies like, pension policies, and their proceeds, that is pension or annuity, is taxable. So, they do not fall under 1010D exemption, which actually government is trying to plug. So our understanding as an industry is that premium paid for pension policies will not be considered under the limit of 5 lakh rupees. So appreciate if CBDT can issue a circular to this effect. Similarly, the death benefit is already out of taxation even under amendment. So for term policies where only death benefit is paid, so even premium for those policies should be out of the 5 lakh limit. That is our request. Sir, another point is regarding, a mention in the amendment that premium for which deduction is claimed somewhere else will not be allowed as deduction. And that is, to avoid duplication of deduction. But we generally find that, premium deduction is claimed under 80C. Now, in 80C, there are other instruments like, housing loan principal repayment. Even when the deduction for housing loan principal repayment is claimed under 80C, while calculating capital gains, we do not reduce the cost of acquisition of house property to the extent of 80C deduction. So, why to have a different set of rule for life insurance sector? So our submission is that if this amendment can be relooked and, to the extent deduction is claimed under 80C, even, for other instruments, deduction should be allowed while calculating the income. And sir, with regard to GST, actually, industry is supporting government in running various exempt policy schemes like PMJGBY, where, the insurance premium is exempt from GST. However, industry is required to reverse the input credit to the extent of that exempt premium. So our submission is that, it increases the cost of compliance for the industry. So if we can be given exemption from reversal so that, it doesn't become a cost for us. So that is our submission. Thank you, sir.
Thank you for the questions. The first one is about multiple registrations and states dealing with multiple authorities. The question is whether there's a time frame within which this is likely to go away. I'm not aware of one. So my simple answer to you right now is that GST, the SGST part of it is state level, and therefore at least in the foreseeable future, I think state level registrations have to continue. There are concerns, I know, which the industry has been raising, particularly about audits of entities which have operations in more than one state, and perhaps the accounting system does not support maintenance of accounts at the state level. And therefore, when it comes to a GST audit, businesses are pointing out to us that they find it extremely difficult to comply with the requirements of submitting state-level accounts for auditing. So one of the ideas which, I personally believe that we will have to think of at some point in time is to go in for some sort of coordinated audits across states, maybe jointly with the states. In fact, it will have to be jointly with the states, so that we can take care of this aspect. What I would also put to you, because this difficulty is mainly faced in the field of audit, and that's why I'm harping on it, is that the time has come for us to also develop auditing standards for entities that have presence in more than one state. I don't think enough work has gone into that, and the segmental reporting for which there are standards does not speak to the requirements of account keeping from the point of view of GST. So I think that if you agree that the dual levy of GST will continue for a while, given the federal structure of our country, I think we will have to think of a solution from the accounting standards point of view. So I would urge, and I'm sure there are many professionals in the audience, I would urge at least some of you to start thinking about that, so that we develop the right standards for businesses to maintain accounts that way. The other question which pertains to CBIC is about reversal of credit on exempt insurance products. Now that's a very basic rule of the input tax credit scheme, and unless you're saying that you need zero rating, which I think is what you're asking for, because if you're saying that the input tax credit should not, it should not be a requirement that you must reverse the input tax credit proportionately for supplies that are exempt, then effectively you're asking for zero rating. And you know very well that in the current architecture of law, zero rating is permitted only for exports and for no other transactions. So, and I don't think that is a feature which is unique to Indian GST. I think all VAT administrations observe that principle, and to that extent, I think it's in keeping with the international practice. Because if the inputs or input services have not gone into a particular output supply, obviously it is not a fair ask to say that the credit should be permitted regardless. So just that much for the time being. Thank you.
So the first issue had been about REITs and InvITs. I think there is no change as of now, and I think you are suggesting that it should be, the period should be reduced. That is the suggestion which you are making. As of now, nothing has been happening. So let us wait for some time and see what can be done. For 1010D, the issue has been about pension policy and the premium paid on term policy. Term policy, I think, as far as my understanding goes, will not be included in that overall sum of 5 lakhs. Pension policies, the premium paid, if it is considered or not, we will further examine it and we can come out with clarification or anything. The third issue is whether the premium, if it has been claimed as a deduction, though the intent of the law is clear, what has been provided as of now. But what you are trying to do is a parity with the other similar things. It's a new dimension to the thing, so we can further study it. What was the other suggestion was regarding a startup working with the government. Probably it's a nice suggestion, but respective ministry will have to deal with it, and we as a tax department, I can't comment on that, but probably the respective ministry can deal with it. We can pass it down to the respective, maybe the DEA or some other ministry, so DPIIT, so that they can take it forward for consultation and any change.
So I think one more round of questions, and just request if we can make it very brief. Mr. Umang Dhingra.
First of all, I would like to congratulate the entire team on the dais for a brilliant budget. So I have certain queries, and more than the queries, these are requests for that matter. Sir, regarding the MSME 43B, so we as industry perfectly acknowledge the fact that we have to support the MSMEs. There is no denial of the same. There is only some request for clarity. Sir, typically in respect of the year-end provisions. So when we make the year-end provisions, often it happens that as a corporate, I am recognizing an expense and making a provision, and it is not necessary that the MSME has already invoiced or will invoice anytime soon. So, sir, if we can at least have some clarity on the fact that how the year-end provisions of MSME would be dealt with. So, second related point, is it possible, sir, because at least it is not within my knowledge, that there is some portal where we put up the PAN and when we can it be linked to the MSME registration? Because otherwise we have to chase MSMEs number of times to know their current status and all. So if that can be done, some linkages, and it can be accessible to the SSC, it would be grateful. So coming to the GST part, there is a request from the industry at large. So there's an issue of cross-charge versus ISD, which has been pending for the deliberation at the council. So meanwhile, what is happening at the ground level, when the audits are happening, there are a lot of questions being put to industry on the same. Typically, when cross-charge is being followed, why not ISD? And when ISD is being followed, why not cross-charge? So can we please have some clarity on the same? This would be really appreciated.
Mr. Rajiv Gupta, Group President, Policy Bazaar.
Good evening, sirs. First of all, thank you so much for a progressive budget once again. My colleague on the insurance side has already asked, few questions. I won't be repetitive on that. One request is the insurance penetration, in spite of 2 decades of opening up the private sector, continues to be at low levels. And tax benefits are one way of encouraging people to buy insurance. So this new clause of 5 lakhs cumulative premiums is certainly going to be a dampener, because at some point of time the middle class will also reach the 5 lakhs limit, and beyond 5 lakhs they will get taxed. The other sector which is suffering today is the health insurance sector, where we are keen that everybody has a health insurance. But today I think the benefit on health insurance is limited to 50,000, and plus the GST on health insurance premium is 18%. So I believe that should be considered, because that's a steep amount for a middle class person to buy health insurance and yet pay 18% GST on that.
Mr. Manish Agarwal, Tata Steel.
Yeah. First of all, thank you for the progressing budget, sir. My question is with respect to custom duty. So the ongoing supply chain diversification which is going on, so this presents an opportunity for India to deepen its participation in the global value chain. So CII is being asking, basically there is a request with respect to 3-tier rate structure. 0 to nil duty on the raw material or inputs part, then 2.5 to 5% on intermediary, and then a standard rate on finished products. So, sir, we need your views on how we can, how we are handling this, or what is the time frame we can expect this 3-tier structure, sir.
Yeah, sir, would you?
Okay, thanks. Let me begin with the last one, which is the 3-tier rate structure. My understanding is it's already there, and we've been talking about it for many years now. So right from, if I remember right, I think 2005 or 6, or maybe even before that. So the current rate structure, if I may just take a minute to explain, your raw materials, basic raw materials, and what we call feedstock, range from, the duties range from 0 to 2.5. There are many examples I can give you, whether it's scrap, whether it's naphtha, there's so many basic feedstocks in different industries. The duties range from 0 to 2.5. On intermediates, in the case of chemicals, for example, those are building blocks. Those are at 5%. And then you have 7.5% on the next stage of value addition. In the case of steel industry, so your flat products and all would all be at 7.5 or 5, depending on what kind of steel it is. And finished products, which are final consumer products, are all at 10%. So it's already a differentiated rate structure as far as I can make out. Of course, you may have, there could be issues around how you describe a particular product, whether you call it an intermediate and I'm calling it something else. So if it has to do with that, you know, we can consider if you have any specific suggestion. But broadly, that is the rate structure for customs duties. I hope that answers your question. The second one was about cross-charge versus ISD. I think it was raised by a member here. So well, I mean, that issue is before us. I think we are examining it. It has been raised in several representations, so we're looking at it. That's all I can say at this stage. The 18% on health insurance, there are two aspects. One, of course, you're aware that the entire rate structure rationalization exercise has to happen. Currently, it's with the GOM, and you know, we'll await the reports. But what you also have to think of as industry is whether taking into account your inputs and input services, etc., 18% is a rate lower than 18% is good enough for you. And will you not end up in a situation where there's an inversion and you have unutilized credits? So, I mean, I'm just leaving that thought with you. If you just give me a minute, I wanted to touch upon a very important amendment pertaining to MSME, which has been made by the finance bill. It's a decision which the council had taken earlier, and this has to do with the requirement of reversing credit if your supplier has not paid the tax. So the common refrain that we used to hear from a lot of industry representatives was that in a value chain, if you know, there's a buyer and a supplier, and the buyer has taken credit based on an invoice that he's received from the supplier, and he's received the goods or services, but the supplier has not paid the tax, the question is, why am I being asked to reverse the credit? Because it's no fault of mine. I've already made a payment to my supplier, and you know, I'm being held liable for reversal of credit. Now, this was a concern which was raised very often. What the amendment that the council has approved is that instead of having to reverse the credit, you know, in the next filing cycle, which will perhaps be the next month, they've said that you can now take till the next September of next year to actually reverse the credit. So the current provision is that if in the current month you're aware that you've received a supply and you can check on the GST portal that the supplier has not paid the tax, you're required to immediately reverse the credit in that month. The relaxation which has now been made is that you can actually wait until September of next year to ascertain whether your supplier has paid the tax to government, he's filed the return or not, and then if you find that he's not done so, it's only then that you're required to reverse the credit. So I think it's a very you know, major relaxation in the, and you know, it was a prickly issue which the industry had been raising with us, so I thought I'll just mention that too.
Coming to the direct tax side, the first is 43B, the clarification regarding year-end provisions, how to be made. I think ICAI would be the right forum, and they should come out with a note or concept note or whatever to clarify for the benefit of everyone. So that is the better position on this account. Pen linking with MSME portal and all that, that can be thought about to ease the operational issues. So that is what your perception is. If you can raise it to the MSME the ministry as well, so that can be taken up. Then there was a concern regarding the policies, which the curb on policies of 5 lakh and more, so I think though it affects the industry, but the real reason for it has been to reduce the benefit which were being taken by the high income group people. So that is the balance has to be made, and I think the industry has to be more out-of-box thinking will have to be done by the industry. And then the ATD continuation, because we have provided it is on the platter of the taxpayer to decide what way he has to go, and even if he is choosing the new regime, whether he would like to take medical insurance of and claim ATD onto that, means that is for the taxpayer to choose now. We have left it at the wisdom of the taxpayer. So that is the position.
I think we have a detailed technical session, so I think there'll be people, so please do. I know I've not been able to cover all the questions, but I would like to thank both Mr. Johri and Mr. Gupta. They've been very generous with their time and also responded to most of the questions. I know there will be some follow-through questions on some of the issues, so we have a detailed technical session after that where we'll have people from CBDT, CBISC, and people who have been very instrumental in as part of the budget process. So if there are any more questions, I think please stay back for the session and do raise those questions. So thank you very much, sir. Thank you very much for spending the time and being with us. And thanks a lot. Thank you. Is there a break, Tanushri, or should we start? Immediately. Yeah. So we'll be starting the technical session immediately.
Request everyone to kindly sit back. We have another very interesting technical session where we will discuss the nitty-gritties of the direct and indirect tax proposals in the budget. So I would like to request Mr. Uday Pimprikar, Chairman CII Core Group on GST to the dais, Mr. Vishal Malhotra, Partner UI, and I'd like to request our panelists from the government. I'd like to request on the stage Ms. V. Rama Matthew, Member Tax Policy CBIC, Dr. Sanjay Mangal, Principal Commissioner GST Policy Wing CBIC, and Mr. Raman Chopra, Joint Secretary TPL2 CBDT. It's there. Remote is there. Your call? They may like to start with, I don't know, between you and them.
I can ask questions, but there is some points. It's cool. See, presentation, you're going to come here? ये तो बाद में करेंगे।
Thanks a lot for, for coming over, ma'am and sir and Mr. Chopra. What we'll try to do, given the paucity of time, that we'll talk about, we'll quickly go on to the questions that are there and people want to ask, okay? But before that, I'll just talk about a couple of issues that I wanted to kind of talk about, and then we can quickly proceed from there. Given that we have ma'am and Mangal sir here, I'll first pick this up. So I understand that the provision related to CSR, okay, wherein expenses which are accounted for and considered under the obligation of the CSR obligation, credit is being denied on that. I think that's fairly clear. I'm not debating whether that's right or not, but it's there. I think the larger issue is that a lot of people will go about questioning, and that's the concern that I'm hearing, whether a particular expense should go into a CSR or is it in the course of business. That a sense, and every expense will then kind of get questioned around those lines. So perhaps, okay, are you looking at issuing a clarification to kind of define, or in a sense, some bit of it wherein this doesn't go into an absolute loop and every expense, which is not overtly business operation, but is done for PR or whatever it is, doesn't start getting questioned. So that, I think that is one concern that I'm hearing more and more. Not so much on this. Of course, the normal cribs are there. I'm not saying no, but the rest of it, the implication, is a concern. So would there be a plan to kind of clarify in general for this? Yeah. No, I think we can cover this. Maybe there's some other question that comes on this issue, then we can go ahead.
Okay, the logic behind CSR, if I explain, maybe it will be make life simpler for everybody. You do realize that in the GST law earlier itself, charitable activities, you were not permitted to take credit. ITC credit was not admissible. It was merely because there was confusion about whether CSR is covered under that or not, and there were multiple interpretations. This was supposed to be clarificatory to ensure there is no confusion. Now you're telling me that there will be a new level of confusion. I'm sorry, I don't know whether law can clarify to that extent. Now, CSR is already defined in some other law. We are merely talking about whether the ITC credit is admissible there or not. And there we have aligned with both corporate law and income tax interpretation and said, since corporate CSR is actually not something supposed to be connected with your normal line of business, in any case, ITC should not be taken. And in income tax, deduction has never been permitted. So align everything, have a single set of interpretations and deny the credit. Now, whether each expense will be, you will look into to see whether it is CSR or not, you are under law required to define what you're doing in CSR. You have a limit. Now, why you are going into this slip, I really don't understand. I would actually appreciate a clarification on that before I go speculating further into where it will go.
Sure, we'll get back.
I will just supplement, ma'am. It is known to everybody here that CSR expenditure is also not allowed under Income Tax Act as an allowable deduction. So I understand that there are clear accounting principles as per which the expenditure is defined whether it is for CSR or not, and it is already being followed by the industry for the purpose of income tax. So I feel there should not be any need for any further clarification on the issue.
Fine.
And this, I think this is well settled, and we should not try to raise an unnecessary
So I think the principle what you're saying is that if you're accounting for it as a CSR in the income tax,
as a CSR,
that should not be. Others
Yeah.
wouldn't get.
Yeah.
That's fine.
Thank you.
Okay. The second one is on the amendment to the section 17.3. I understand that that amendment actually has been done primarily to deal with the situation related to sales by duty-free shops. and not for any and every kind of sale that could get covered under clause 80 of Schedule 3. And the way it's been worded, it's only those transactions as may be prescribed which are covered under related to 8A. So there's a bit of concern that came about, that is it all of 8A or just specific as mentioned in the council minutes of the meeting would get. So is there a plan to just prescribe the DFS nature which was covered under that deliberation? And that, that kind of certainty would be appreciated, because otherwise it impacts a lot of other transactions which are liable to duties that when they come in and so on and so forth. So can we expect some bit of clarity? Otherwise a lot of people will need to then kind of look at their existing business operations too.
Udayji, you have already answered the question, answered the issue in your question itself. While we have drafted this provision, we have very clearly mentioned the activities or transactions pertaining to para 8A as may be prescribed.
Yeah.
So our intention is very clear that we do not want to cover all the activities of para 8A, and only those activities which will be prescribed as per recommendations of the council, that will be covered under that particular explanation. The intention was, as you have mentioned, to exclude certain sales made by the duty-free shops, which are in nature of bonded goods. So the intention of the council was that only, and what actually comes out in rules will be known in the coming times with the recommendation of the council. But I will assure you, it is not to cover all the activities of para 8A. It is only certain specified activities which will come, which will be prescribed as per recommendations of the council.
Okay, this helps immensely because a lot of questions were coming on that. One suggestion that has come, to us on the amendment to 12(8) of the IGST Act. I think it's a good amendment because it removes a lot of unnecessary complication. Okay, I think the suggestion that has come from the industry is that please define a specific date from when this would be applicable, primarily because a lot of people would need to make changes to their own billing systems, logic in their own ERPs and so on and so forth while going about putting this in place. And obviously I think the other part is the portal changes right now for avail link credit related to the changes from 96 and 97, availment of or charging of that I think is in progress, yeah. But this one, it would be very helpful if you define a specific date, then people can work towards it, because overnight people will need to then kind of change the billing logic in a sense.
Yeah. As you are aware, I cannot specify any particular date because this is the amendment in law, and any amendment in law we notify only with the approval of council. So we will this will take some time at least, and after the council's meeting, whenever the finance bill assent to finance bill is given, after that only this view will be taken by council when this will be notified. I cannot give a specific date. As per the, if you go by the trend of the previous year, it was 1st of October. Maybe it is 1st of October in the coming year also. But because it's a IGST exemption, maybe center decides to notify it earlier also with the approval of council. Because we don't have to wait for states to make the corresponding amendments in their acts. Second thing is about changes which will be required. As regards the state code, it has already been done. And when this change will come into effect, then this state code issue will be resolved totally. Then it will come as a normal supply, like any other supply. So there will be some requirement, but we will give you sufficient time so that you can make the corresponding changes in your software. Thank you.
Now, on the GST front, if there are any questions that want to be raised, I think Umang raised a very pertinent one, but if others are there, yeah, yes, sir. Can somebody give him the mic?
Yeah, my question is regarding GST on education. I think it's 28%, and books and other things 8%. I think this GST on education is too high, and it's same is remittance also. If someone is going abroad, they have to pay tax. So when we are trying to be a Vishu Guru, so I don't think this is where we can become like that.
So your question, if I understood, is that the GST rate on education is at 28%. Okay, it's not entirely clear what is the rate that you're we are missing. Education. Okay, maybe perhaps. I mean, do you understand?
I don't know which specific service you are talking about on which 28% duty GST is on education. My officers from TRU also can, whether there is any service on which we have levied 28% on education. My understanding is that education service is exempt under GST. So I don't know what specific thing you are talking about. Are you talking of GST or income tax or GST on foreign remittance? If it is, I don't know. Like
there is no such.
There is no such taxation under GST.
Good evening, sir. This is Dr. Dhawan from steel industry. GST is one of the best decisions which the government has taken. And for steel, the raw material which is coming from mines, particularly the iron ore, it has a GST as far as GST is concerned, one rate, but over and above that, there are large number of cess loyalties, which amounts to 20%, which becomes a cost because it is not moderatable. So CII, we are also part of CII Steel Committee, and CII has been taking it up. And if we go back in the last 2-3 years, this has been one of our requests that please subsume all these levies into GST. If required, change the rate upwards or downwards. Alternatively, please make these royalties, these other taxes, etc., which is amounting to 18 to 20%, moderatable. Otherwise, it's just a cost in the product. Thank you.
I do appreciate your concern, but you should also appreciate the fact that most of these cesses are collected for a specific purpose, and they are really not a part of the general pool of taxes. They are used for they are collected for a specific purpose and used for a specific purpose. So to redefine that would be actually, there's a certain level of impropriety on our part. We can have it examined otherwise, but to subsume it into GST would change the essential definition of the tax itself. So it may or may not happen. But I would suggest you submit a proposal, we'll definitely examine it.
Hello, I'm Neetu Gupta from Aviva Life Insurance. First of all, I would like to thank CBIC for coming out with circular where they have recognized that in case of the initial year's input credit for financial year 17-18 or 18-19, there have been issues, reporting issues, mismatch because incorrect GST number reported and all that. Now the solution provided in the circular, is again welcome move that, take certificate, do this. our industry submission is that, if we can do that online, because, now everything is online. So if this one aspect, for the past, and that's not a very long period, only till 31st December 21. I know that right now circular is only for 17, 18 and 18, 19, but from January 22, we are already online, reconciliation is happening on concurrent basis. So only for that past initial year of 4-year period, if this facility can be provided in the system where, a person who has given the service and made a wrong entry of GST number, he can correct that in the system so that, footprint stays in the system. The tax authority can have a look at that rather than, we submitting CA certificates online or, offline, collecting them from various sources. Our vendors are spread all across India. So this is one submission if this can be looked into. And second thing is that, for the past period, now especially, when we look at pre-COVID and post-COVID period, we find a lot of vendors, they have gone out of business for variety of reasons. Now, for those small vendors, to ask the, the bigger players or the bigger industry players, to pay the input credit because the vendor has not deposited somewhere in 17 or 18. So that is also, the industry request, if that can be looked at, and, some threshold in terms of that beyond this amount, if the payment is not made, certainly, it can be sought. But even for small amounts, if this kind of request comes, that becomes really onerous. Thank you.
Thank you for your question. This facility for year 2017 and 18-19 is a facilitative measure. And this was done considering that large number of notices were being issued because scrutiny process has started, audit has started, and unnecessary litigation was going on. So considering a procedure was prescribed, otherwise it is beyond law, I am saying. Law, as per law, there has to be a recovery. It was beyond law, and facility was provided that opportunity be given to the taxpayer to provide a sort of a certificate, and in most of the cases it is in a way self-certification from the supplier. If the amount of ITC involved is less than 5 crore for a particular supplier, then a simple certificate of supplier can suffice. And only if the amount for a particular supplier is more than 5 lakh, sorry, not 5 crore, 5 lakh, then only the certificate from a CA is required. Now, you have requested that whether this could have been made online. It could have been, definitely, but because it was only a stopgap arrangement for an interim period, and if we have waited for automatization of this process, it would have taken further 6 months to 1 year. And in the meantime, the show cause notices would have been continued to be issued and finalized, and would have led to appellate procedure. So we wanted to give a finality to these sort of matters, and because of this, we provided this stopgap arrangement. This was tried in one of the states. We took the lead from them, and we then extended it all over India. So I hope it should resolve most of the disputes. There will be few ITC, which some amount of ITC, which will still be in dispute, but then we will have to deal with it. It will resolve more than 90% of those disputed ITC. So some portion we will have to accept that if the supplier is not existing, supplier is not willing to give any certificate, then it has to be dealt with like this. Because supplier has made, first he has not uploaded the correct invoice, and if he is not willing to even give the certificate that he has paid tax in respect of that invoice, then the recipient will have to suffer to that extent. But there will be very few suppliers of such category. For you as a supplier, I think this will be an issue. You are talking as a supplier or as a recipient? Recipient, there will be some supplier, and that small quantity you will have to bear.
Primarily, if I can add, the problem is arising because, for those suppliers
I can say one thing. Even if their registrations were cancelled by GST department, there is facility for them to file their pending returns till the period of cancellation. There is no bar, but on the other hand, it is required by them to file those returns because they have already collected that tax from the recipient. So they are required to collect, and we may also think about bringing a amnesty again in a way for revocation of their registrations. So we are thinking of some scheme so that these people who could not file their returns and their registrations were cancelled. So whether we can bring out a scheme for some amnesty for revocation of their registrations. So we are also thinking in that direction. Thank you.
Just one connected, and just one connected what Neetu mentioned, is that a simple ability to amend returns of the past, okay, that facility where, I mean, when you're kind of going through, especially for the initial year, even later on, when you're kind of going through maybe your own kind of compliances, reviews, or whatever it is, an ability to kind of amend the returns where there is maybe misclassification B2C to B2B and so on and so forth, rather than a full stop to kind of no ability. I mean, you can make a change right now where there is in the present one, but actually it's making a change in that old returns. So right now the transactions that you can kind of perhaps report.
Also the facility is also there. There is a time limit for making those changes.
Exactly.
Okay, but about any return system, there has to be a finality. And you cannot say you will continue making those changes, although you have finalized your records, you are filing your annual return, but even after that you will continue making changes, so that will create a chaos in the system, and because every change you are making, it will affect your recipient also. So there will be a lot of chaos if you allow to do it continuously. Initial period, definitely there were some problems, but if you say that in future also it should be allowed to continue like this, that any time, even after the period of limitation, you can make changes, then it will become very difficult to administer the tax. Because we will also have to conclude the scrutiny, conclude the audit procedures and all. So there has to be a time limit up to which these changes can be made. There is required.
Understood.
Good evening, sir. Sir, I have two connected questions for the benefit of exporters. Sir, as per the refund provisions, in case of refund export against IGST, then the refund is allowed upfront at the basis of filing of shipping bill. But there is certain rule has been inserted at Rule 9610, which debars for getting refund if they are availing any advance authorization benefit at the time of procurement. So this really creates a hurdle for the exporters. They are getting notices from audit, or they have to refund along with interest. Another question is that there is certain rules has been proposed this budget, that in case of delay of refund by the revenue officers, the 60 days limit, they have to frame the rules. So because at the time of, assessee front, they have to give interest in case of 1 day delay also. But for revenue front, they are taking the relaxation for this. Sir, I know the intention behind this, sir. Thank you, sir.
Can you repeat the second part of your question? It was not very clear.
As per the refund procedures, in case of any delay of issuing refunds by the revenue officer beyond 60 days, the certain rules has been to be prescribed in this budget. But before that, any delay beyond 60 days, they have to issue the interest to the taxpayers along with the refund amount. So that's the question, ma'am. Because now that restriction has been removed out.
I'm sorry. I think you're factually incorrect. What we have actually said is that if the delay beyond 60 days is on account of any delay by the taxpayer, that period will be excluded. We have not changed anything else.
Actually, what we have done in the finance bill, we have made an enabling provision to define to provide the manner of computation of period of delay. The intention is that in certain cases, The delay is on the part of tax officer himself. So we will not exclude that period from period of delay. But in number of cases, the delay is on part of taxpayer himself. For example, he requests for extra time for filing show cause notice beyond the prescribed period of 15 days. Or he wants another personal hearing, second personal hearing, third personal hearing, or whatever so. And there are some number of issues in which incorrect bank account details are given, due to which the refund cannot be credited to the account of the bank of the applicant. So to exclude that particular period, this enabling provision has been taken, and what actually will be excluded from the period of delay, this will be defined through rules. So that will be prescribed in the due course, but we have not made any fundamental change in the rule, the fundamental change in the provision. As regards to your other question about 9610, this restriction for IGST refund is there under 9610. I think everybody is now aware, so there won't be any issue presently. There were some issues regarding the initial period, I think, if those are the same. And for that, we have made a change. We have provided a functionality of PMT 03A, which will be operational very shortly. And this will enable people who have refunded that amount, IGST wrongly claimed, which they have refunded, so they can get the credit of that amount in their ITC ledger. To that extent, we have done. We cannot say that this will be like this IGST refund which was wrongly claimed will be a sort of like some amnesty will be given for that. This is a wrongly claimed, so it has to be reversed. But we have provided a functionality, then at least credit of that ITC which they had utilized for payment of that amount is coming to the credit ledger of the taxpayer. Thank you.
Okay, there's a question.
Sir, Shyam Tiwari, Sub Infra Project Management and represented construction industry, roads. एक हिंदी में क्वेश्चन है साहब कि हमारे यहाँ पे जो जीएसटी अभी मेरी कंपनी भी जीएसटी में भी हाल में रजिस्टर्ड हुई है। एक रिक्वेस्ट था साहब कि अगर कोई एमएसएमई 1 करोड़ का उत्तर प्रदेश गवर्नमेंट में माल देता है तो गवर्नमेंट को तो 1 करोड़ रुपया का सामान मिला, 18 लाख रुपए में 9 लाख रुपए स्टेट गवर्नमेंट को और मिला, 9 लाख भारत सरकार को मिला। जब स्टेट गवर्नमेंट टाइम से पेमेंट नहीं करती ना तो उसके कैश फ्लो से 18% और गायब हो जाता है। मेरी रिक्वेस्ट ये है, देखो प्राइवेट में तो नहीं आप इंटरफेयर कर सकते क्योंकि 1-to-1 बिजनेस है, रिस्क है तो बिजनेस है, लेकिन आपसे एक गुजारिश है छोटे भाई के नाते कि जब स्टेट गवर्नमेंट टाइम से पेमेंट ना करे तो उसका जीएसटी भी तभी मिले जब उसको पेमेंट लगे, तो दर्द दोनों तरफ हो, प्लस एंड माइनस। तो मेरी रिक्वेस्ट ये कि स्टेट गवर्नमेंट में सेंट्रल में 9 लाख रुपए तो आप ले गए और 9 लाख रुपए हमारे योगी जी ले गए। अब हमारे पास बचा क्या कि बिजनेसमैन से 18% वो भी गया। 18% का ब्याज मार्केट पे लगभग 15% एवरेज मिलता है और पीबीजी होती नहीं, बीजी मिलती नहीं और सब काम नंबर 1 पे हम भी कर रहे हैं नंबर 1 पे। आपकी क्या राय है? हिंदी में बोलेंगे तो मजा आएगा।
तिवारी जी, आपका जो विचार सुना बड़ा आपने दिल से बोला है पूरा, और दिल से हमारे भी दिल तक पहुंचा है। तो हम ये कोशिश करेंगे कि ये जीएसटी काउंसिल के दिल में पहुंचाने की कोशिश करें ताकि आपकी जो समस्या है उसका सुधार हो पाए।
Hello, sir. I am Rohit Kumar, founder and CEO of Jet Softpoint. I am also a mentor at CIS Center of Excellence for Startups. My question to you, sir, Sanjay sir. Sir, fund access is still a challenge for early stage startups. If a startup is, much older, then they can easily access the funds. So my submission to you, sir, if we can provide more incentive to startups for tax incentive and venture capitals who are going to invest in startups, so that we can, incorporate more venture capitals to invest in startups, providing more tax incentive to venture capitals. What about providing these incentives to venture capital, sir?
I think your question is towards CVDT more than CVIC, and I will request Raman to respond to it.
Presently, the issue was raised in the first session also with reference to angel tax. Primarily, you are referring to what incentives are there for startups. There are a number of incentives already on the statute relating to startups. One is 3 years out of 10 years, they have their taxable income not to be taxed out of 3 years out of 10 years. Further, they have a carry forward of loss, etc. The venture capital portion comes into picture when startup is raising funds. When startup is raising funds from venture capitals, the startup is not taxed on the amounts received in excess of the value of the shares from venture capital funds. That is already on the statute. That benefit for the startups is already placed. A notification was issued in March 2019 which specifically excluded all startups. That a startup which is registered with DPIIT under para 4 of the notification of 2018 will be excluded from application of the provision of 5627B. That is what we call angel tax. That notification is already there. Funds coming from residents are already excluded in that notification. Startups receiving funds from residents are excluded from angel tax. That notification will be modified to include non-residents also, as the position of law when the notification was there pertained only to residents. That notification has to be modified, that will be modified. The incentives you are seeking for startups, you have to be specific on those incentives. Whatever comes to the department from DPIIT, we consider it, and it is reflected in the budget exercise. I don't know what specific incentives you are seeking at this point of time. Thank you.
Sir, what about those startups who are not incorporated, but they have only MSME license?
I'll just comment on that. DPIIT has a very simple process of registration. The primary registration of startup in a DPIIT is very simple and nearly electronic. They are registering everybody who applies to them based on their own documents only. The limit for angel tax for startups is 25 crores. That means only small startups are covered in para 4 of the notification. So whatever benefits a startup has to draw, there are a number of schemes of DPIIT from where you can get assistance. Those are available to registered startups only. I would always suggest that you need to register, and you should always register as a startup under DPIIT to be able to get those incentives. That's it.
So, just a minute. The one behind you now, he's been raising his hand. So let me give him a chance, and then you can.
Thank you. This side Prashant, partner of RNBP. Actually, my question is with regard to the GST registration. So nowadays, in GST registration, there are certain documents which are required to attach while applying for the GST registration. But nowadays, what is happening all around the country, that whenever you apply for a GST registration, there will be mandatory so-cause notice in every case, and that the GST registration timeline goes for a month, at least a month, and in some cases, even 2 months are required to get registered under GST. So my question is that in case all those documents are required, then we should mention it in the Act and give a functionality in the GST portal itself to upload the Aadhaar card, PAN card. Sometime the GST officer is also asking for a trade license. So all those documents are not part of the Act, but the GST officer is now asking.
I have noted your concern. Although this concern has been raised by different people, but we have mentioned some documents in the GST registration form and all. There are some other documents which, based on the specific situation, are sought by the tax officer. But as you have mentioned, different tax officers seek different document. If you submit one document, then they may ask for different document. We are already examining whether we can prescribe some standard documents besides the addition, these documents which are already there. We are also looking at some other process. The GST Council had already approved a process of biometric verification, authentication of Aadhaar, for which pilot will be started in Gujarat, where at a spot only the documents will be verified at the place which will be identified for this purpose. So all these exercises are going on to on one hand simplify the process, on other hand to further strengthen the process. As you know, a lot of people are misusing the scheme by taking fake registrations and then defrauding the government as well as defrauding the other recipients. So it has to be a balancing act. We are looking into it so as to come to the right balance. Thank you.
Okay, after this, I think.
Good evening. This is Rajiv Singhal, Company Secretary. I have one question regarding the payment of advance tax. If somebody missed the deadline and forgot to pay the advance tax, he is liable to pay 1% interest every month for the delayed period. But for the purpose of the refund only, the government pays only 6%. So I think it should be the equal level playing field. And secondly, advance tax is due whenever it is due. Advance tax is to be paid, interest on advance tax is to be paid whenever it is due. But if the government is issuing the refund, the date of the rate of interest falls from the date of assessment only. So I think this anomaly requires a lot of, you can say,
first of all, no, it's not. It is not a budget related issue. It's not come out of this year's amendment, first of all. Secondly, yes, there is a differential in the rate paid by the government and paid by the assessee. This has been there since time immemorial, since 1961 I suppose. There was a differential rate always, but presently the differential rate is very similar. Third point, you said it is paid only from the date of assessment. No, if you file a return before due date, in time, interest is paid from 1st of April of the year to the time the return is actually processed. So I suppose that interest period for an additional tax which is deposited to the government is fair enough. And above that, 6% is a fair rate. In current context, 6% is a fair rate which is being paid by the government to you. Default of any sort of non-payment of tax should not be viewed in the same manner as a extra tax paid by you on which government is paying tax. That is my take on it. There is a differential rate and it will remain, I can assure you. Thank you.
Okay. I mean, last maybe GST, if there is a GST question, maybe the last one person, but is it a GST question? No, so just a minute because ma'am wants to go. So if it is a GST question, then ask, we can take that up. Maybe the last one or two.
Yeah, hello everyone, this is Sandeep Bansal. I'm part of Corteva Agri Science Tech team. So this question is...
Can you just speak a bit loudly? We can't hear you.
Yeah, so there are a couple of requests which I want to make. Couple of months back, there was a guideline which was issued by CBIC with respect to prosecution, that in what cases the prosecution should be launched. So my request is that if similar thing can be made available by CBDT as well, that would be of great help. Number one. The other thing is that of late there have been plethora of judgments with respect to questioning whether seed is an agriculture produce or not under GST. I mean, they have challenged that seed is not an agriculture produce because once it is chemically treated, it does not remain an agricultural produce. So my humble submission is that GST definition of agriculture produce is that if the characteristics of the seeds or the characteristic of the product changes, the request is that we need to understand that what seed is composed of. So the characteristics should be understood as to what it is made of, rather than defining edibility of a product or not. So, I mean, I give a very layman example. In winter season, if somebody is wearing a coat, so he's doing so to protect himself, not because it enhances the personality of a person. The person remains the same. So similar is the thing with the chemical treatment of the seeds as well. Once you chemically treat the seeds remain seed. I mean, prior to chemical treatment also, it was supposed to be sown, and after chemical treatment also, it was supposed to be sown. So if some clarification in that respect can be given, that would go a great extent. And we have similar litigation in direct tax front also, whether seed, growing of seeds is subject to income tax or not. So there have been, way back in 2002, there was a research report which was given by tax department themselves, making a suggestion that similar to coffee industry, rubber industry, some Rule 7 thing can be brought in for the seed industry as well. So it's been more than couple of decades that these issues have been litigative. My humble submission is if some kind of clarification can be brought in, that would go a long way in settling some of these issues. There are matters pending in Supreme Court since 2012 on these very issues. So, I mean, we are just struggling. Every year the issues are piling up, but no response or to no avail. Thank you.
So, if the matter is already lying before the Supreme Court, it would, I think, not be very proper on my part to try and clarify the issue in a forum like this. And it's complex enough that the Supreme Court has been handling it, looking at it for nearly 10 years. I'm sure there are arguments on both sides. But I will definitely have a look at this particular issue because I actually do not recollect this one. As far as the other question is concerned, I think Raman will have to take it.
On the prosecution thing, we had come up with a compounding guideline somewhere in October, late October, that in fact takes care of your what cases are to be compounded, and it has been made very flexible and in line with the policy of the government of decriminalization. The government has a deep thrust towards decriminalization, and apart from some sections relating to tampering in search cases, apart from some sections related to tampering in search cases, all sections have been made compoundable as of now. For a first offense, therefore, prosecution, though initiated, and initiation guidelines are already in place, but even if it is initiated, the offense becomes compoundable. That takes care of most of the issues on that account. We'll get back on that. We'll check out our guidelines. I suppose the guidelines already have a monetary threshold, but I don't think what you are suggesting is that a characteristic-based prosecution initiation is provided in the Income Tax Act. Fundamentally, due to the reason we have separate sections for separate offences. There are about 12 sections for prosecution which list out separate offences and separate prosecutions. Suppose a non-filing of return, there is no question of any discretion in non-filing prosecution. Only a monetary threshold has been provided in the guidelines. I feel that is enough, but we'll have a look at the guidelines and we'll check it out if we can improve them further. Thank you.
I guess we need to move on. There's a question from Mr. Mahesh Kanchan. There's a question.
One is kind of a, I would say not a question, but an observation and a build. One is the allocation that happens on agriculture with a focus on kind of animal husbandry, dairy, etc. That's up, which is very good, and that has good income and employment generation potential. So are there any gaps that the government is looking at and where private sector can chip in to kind of fulfill these gaps and focus on getting some private sector participation in these sectors? Would be critical to know that. That's question number one. If you want me to probably ask question two, I can probably move on to question two as well.
So I guess, I mean, this is given that this is a tax technical question, we'll pick it up.
Sure.
And we can refer it to the relevant ministry.
The other piece is basically, we do import a fair bit of food items, and, we had made some representations. What happens is, in a lot of food, packaged foods especially, though we are looking at driving localization, there's some amount of imports that do happen. And you do find some smaller players, somehow or the other, typically tend to, through some way or the other, get it under invoice, duty evasion. The bigger players, who are the more organized ones, typically have a challenge. So also we had looked at oils as one industry where there are certain oils where there's no level playing field in terms of taxes. So there was a request saying that, if the taxes can be, so just to give you an example, if you look at sunflower oil, soybean oil, they come at a particular tax level, but a safflower oil or a olive oil or a canola oil come at very different taxes. So is there any possibility of ensuring that there's a level playing field for different edible oils? And this hurts typically the organized players who get it at the right one, but the unscrupulous players get it much lower.
So the answer to your first question is actually it's an enforcement action, not a policy action. When there's a misdeclaration, I would suggest that if you have specific details, you approach us. We would definitely take action. The second one is as far as your what are called the higher end oils, canola and olive oils are not oils of common use. So there is a differential treatment based upon the perceived usage as a luxury item. So that is unlikely to change, but we can definitely examine it.
Okay, now I think should we just start off the income tax discussion, and then I think there are questions there. You please ask.
Good evening. I am Shrikant Sharma, Director, Metacool Private Limited. I am also as member of subcommittee on MSME development of CII. Sir, this is with regard to section 43B amendment. It's a good amendment so that the MSMEs get timely payment from the corporates, the 15 days, and if there is an agreement, then 45 days. But the question is, many a time MSME gets supplies or sell to the MSMEs itself. In the market, there is definitely many times there are agreed terms of 45 days or 50 days or even 60 days for payments. Maybe not in writing, because it is not between corporate to MSME, it is only MSME to MSME. So in that case, for a small MSME, maybe with a turnover of 1 crore or 2 crore, suppose he purchases 10 lakh rupees or 20 lakh rupees product from another MSME, and if he doesn't pay within 45 days, so definitely it is going to hamper the provision and tax liability of the MSME. So it is giving, instead of giving benefit, it will be a great negative point. So my request is only that there are various exemptions. So we should also exempt when the transaction is between MSME to MSME. This is my suggestion.
Unfortunately, the MSME Act clearly lays down a position that whenever any receipt is by the MSME, anything is purchased from the MSME, the payment has to be made within 15 days or 45 days. There is a specific provision in the Act. In that Act itself, there is no window per se for a purchase from the MSME. So if that principal act of the ministry does not have any window, you cannot expect a window in the Income Tax Act. We are only aligning ourselves with the substantive act which is already available to the benefit of the MSMEs. We do not intend to provide any other windows. It is the starting year in which we have actually adopted. The amendment has been appreciated by the MSME sector throughout. If we start providing a window of an agreement, then you know that MSME is a smaller instrument. The bigger industry can at any point of time force an MSME into an agreement type that an agreement of 100 days exists. If such windows are created for MSMEs, then other windows of agreements can also be sought, which will not be positive for the MSME sector. My take on that is we stick to the law which is there and bring it in the Income Tax Act that has been brought in. Let us function it for a couple of years and we'll see how it develops.
So this is a question on income tax? Sorry, there's somebody asking a question. Yeah. There's one last question on GST.
Sorry, I just missed that thing, so I'm asking for a GST. Thanks for giving the opportunity. Thank you, sir, even. Thing is that I'm from one of the e-commerce industry, a real startup. So I'm facing a problem, you know, if some suggestion is that regarding the section 52 of TCS. So TTS, TCS, tax collected source. So we need to submit that thing, and it's a very tedious thing to you get the register, all the vendors and things like that. I think that provision is being done keeping in mind the unicorns, the big players of things, but the small players is really facing a problem with this TCS provision of GST to making the suppliers to making the payment and deduction of TCS to make the payments to suppliers. Sir. If any threshold will be there, a reasonable threshold, if can be done, so it really will be a help to players like us. Thank you.
About this problem being faced by you regarding deduction of TCS for small suppliers. This issue has been, I think you may be aware that this issue was deliberated by GST Council, and already a decision has been taken by GST Council that small suppliers up to threshold limit, prescribed threshold limit of 20 lakhs or 40 lakhs, they need not get registered for making supplies through e-commerce operators. And e-commerce operators will not be required to make any TCS deduction in respect of those players. So this will come into come into operation with effect from 1st October. And if there are people who are required to take registration under GST law still and make supplies through e-commerce operator, in those cases because they are liable to pay tax, so there is a requirement of TCS deduction. You will have to bear with the government for that. Thank you.
So maybe I think we can now start with so maybe we want to ask a last question? Can I ask the last question? Is it income tax? Okay, yeah, please go ahead.
Good evening. Amendment in section 1046 is, can you hear me, sir?
Yeah.
Amendment is in section 1046 is welcome one.
Yes.
This is with respect to municipalities and government agencies. Can a view be taken by other charitable institutions also that if their income is applied for charitable purposes, then
I can't hear you. I'm sorry.
Sorry. I was saying that can the same view be taken by other charitable trusts that if the income is applied for charitable purposes, then such income will be exempt? Just like
we can't hear you.
I'm so sorry.
You might need to maybe come a little ahead if you can't, or at least speak loudly. But thanks a lot, ma'am, for giving your time. Thanks a lot.
Thank you.
Yeah. We'll come over with all the other suggestions. No.
Hello. Yeah. So, section 1046 amendment. Can a similar amendment be extended to charitable trusts who apply their income for charitable purposes, and that income be constituted as exempt, just like amendment is done for municipal organizations and government agencies?
The 1046 amendment is a very specific amendment intended for entities which have been set up under an act of the central government or the state government. For the charitable purpose or a charitable entity, already the provision exists under 11 and 12 that when they apply the income for charitable purposes and are registered under section 12AB, they are already exempt. So we do not need another regime similar to 1046A for them, because here what you are suggesting is that charitable purpose income should be applied to charitable purpose activity that is already incorporated in 11 and 12, and those entities are already exempt. I just cannot get how a similar exemption would help in any manner.
My second question is about section 28(4). Whether a write-off of a loan by a lender be constituted as his income or no? And with respect to the borrower who's not been able to repay, would there be a section 194R TDS requirement?
This issue was raised last year also, and the department, CBDT, had come up with a detailed circular where banks were required to write off some loans or write off some debts, and whether it would constitute a perquisite in the hands of the recipient or a benefit in the hands of recipient. A circular had come up which had excluded banks and a set of entities to whom such write-off would not be considered as a perquisite. If you are writing for a general term, a circular has not been issued as of yet. Since the provision in 28(4) has been brought this year only, we will have a stakeholder discussion and come up with a guideline on that too.
So because the point which is there is that the Supreme Court has itself laid down that loans which are not in the ordinary course of business, if they're taken and they are written off, then that doesn't get, it's a capital receipt. So while the exemption has been granted to banks, the other loans are not covered, but they fall in the same category. So that's where the question is coming up, is that if it's a capital receipt for the recipient, then why should there be a withholding and why should it be covered by 194R? That's, I think, the question.
Now that is a different perspective altogether. Yeah. Suppose I give you a gift.
Right.
That gift is capital receipt in your hands. Fundamentally a capital receipt. It is not in the nature of income or a revenue receipt.
Right.
So if you are trying to analyze it from the angle of a capital receipt or a revenue receipt, I suppose you will not succeed there. The issue is to be examined that whether this write-off of loan in your books as an income tax assessee is a final write-off, whether you have given up all rights of recovery at any point of time, that needs to be considered.
Right.
And there we will come up with guidelines that at what point of time it needs to be considered as a benefit in your hands.
Fair point.
Not from the capital revenue angle. Yeah.
Sir, now moving on to, sir, again, I think there are a number of provisions which have come on the personal tax side.
Yes.
The alternate scheme taxation scheme has been made more attractive. And I think there are benefits sort of ranging from 50,000 to 75,000 rupees for individual taxpayers in the low income brackets. Yes. And also for super rich, the rate of tax has been reduced from 42.75 to 39%. Yes. And I think the finance minister mentioned that that results in a saving or a cash outflow of 38,000 crores. Total aggregate.
Yes.
So now, sir, some investment avenues for super rich have been taken away. One, of course, is this investment in house property, on capital gains, both on non-residential properties as also residential properties. So, sir, one, I think the government has this logic, but at the same time, sir, with the spiraling prices, price increases in property prices being spiraling, I think people who genuinely want to shift locations, they will end up paying taxes if they are in that income bracket. So I think that was one point, but I think that's something the government would have considered. But one of the issues which some of our clients are raising is that under these sections, if you want to buy a property, that property needs to be bought in or constructed in 3 years or bought in 2 years. So if a transaction is happening in 2023, in the current fiscal year, and the purchases happened in maybe 2 or 3 years down the line, there could be some level of litigation around that. That, the property has been purchased, so can there be some limitations coming in that you can't buy a property more than 10 crores after 2 years or 3 years. So there is some scope for litigation by the tax authorities. So can some sort of a clarification come on that this will apply only to property sales after that point and not necessarily to when the property is purchased?
As far as I understand, the section clearly provides a deduction from capital gains chargeable to tax.
Right.
It is not a retrospective section in any manner. whatever transactions which occur after 1/4/23, on that capital gains, if you invest in a residential property of such capital gains occurring to you after 1/4/23, only an investment of up to 10 crores will be recognized as an investment in a new asset. Anything beyond 10 crores will be ignored for the purposes of subsection 1 of section 54 or 54F. As a result, your deduction will be limited to 10 crores for that assessment year. That is assessment year
23-24 or 24-25 onwards.
24-25
Right.
onwards. That is clearly laid down in the memorandum. I don't think there is any
scope for debate.
Room for debate on that.
Sir, the second change which impacts both the financial sector as well as super rich is this taxation which has been imposed on market-linked debentures.
Yes.
Now, sir, the rationale is very clear that these are basically disguising, incomes taxable at normal rates, but they are built into a debenture product. And also, I think the reference in the explanatory memorandum is also on a listed debenture. And listed debentures get taxed at 10% if they are sold after 1 year. And the current law now provides that, whenever you sell, whether it's 5 years, 7 years, whichever point you sell, it will be taxable as short-term capital gain, which means at a regular rate of tax. So one concern which is there is that it is somewhere coming out as a retrospective tax from the perspective that, sir, the investments which have already, so most of these products have a defined period, 1.5 years to 2 years to 3 years. So an investment which has already been made, let's say 2 years back and is maturing in April, and investment decisions are taken on the basis of tax outcomes. And so anyone who has invested 2 years back, just because the product is being redeemed in April, will end up paying, let's say super rich will end up paying 39% tax. If the same thing got redeemed in April or March, it is a 10% tax. So that is one concern, that like you done for LIC policy or the life insurance policies, that there should be only new policies taken after April 1. I think that was one point. The second point is that they are both listed and unlisted MLDs. Unlisted MLDs were qualifying as long-term only after 3 years, and they were taxed at 20%, like a debt mutual fund. With the disadvantage that in a debt mutual fund, you get an indexation benefit, but for a unlisted MLD, there was no benefit. Now everything is being equated and put it under one bucket. So, sir, one is, of course, it impacts, the investment decisions of investors, and also past investments are now getting hit by this tax. And the second point, sir, also is that, sir, from the NBFC sector, that has been a very good source of raising money at a very attractive rates, because typically most of these market-linked ventures are getting 8 to 9% even today. So that window is closing. So what do you have to say about that, sir?
First of all, we have an audience above 200 people here. How many of you have actually invested in MLDs? One hand? Anybody? One hand out of 200.
Two.
2 hands out of 200. I'm even surprised at two hands out of 200. MLD is a really high net worth individual investment decision.
Right.
MLD is not.
No, that's why called super rich.
It is the super rich decision. Me and you are paying tax at 30%, and the super rich gets away with the same interest. It is a debt instrument, and paying 10% on that debt instrument. There is no logic of taxing him at 10%.
That point is completely taken. That is very clear. That is very rational.
Second answer to retrospectivity. On my first answer to capital gains, when you were selling a house, you were okay with the house being sold after 1/4/23 and capital gains being charged on that, and the provision being applicable to that. The gains on that will be taxed to a certain extent.
Right.
In excess of 10 crores, they will be taxed. Why is MLD different? You did not ask me that when I constructed that house or when I bought that house, I was not aware that this deduction would not be available. It works in the same manner.
So only difference is that because these are defined periods, you have to get out of it. A real estate property you can sell today. If somebody wants to really get the benefit, he can sell it in the next 2 months and get out.
It is a considered decision of the government to bring debt instruments at par, so that people who are misusing and using debt instruments to pay lower tax should be taxed at a proper limit. I think it is fair enough. It comes in force from 1/4/23. Any sale after that will amount to a tax at a higher applicable rate. I think it is a fair decision.
Fine.
So that is what the decision was taken on that.
And sir, one question which was raised on the insurance products where, the 5 lakh limit has come in. So I think the way the section reads is it's not 5 lakh on one product, even if you take multiple products. Then also if the total amount exceeds 5 lakhs, then this, tax triggers in. So of course, the companies will be careful issuing a 5 lakh type of a product. But what it can also result in a situation is that even the low value products can get impacted in a manner that, sir, today somebody has the capacity only to pay for an insurance premium of 1 lakh. He'll go for it. But as time passes, he will take more policy as his obligations rise or his disposable income rises. So at some point of time, it will become more than 5 lakhs. So that point of time, he will start, those challenges will start arising.
Accepted. Your statement on that point is accepted. We have worked on the data made available from the insurance regulators at this point of time. 5 lakhs was a reasonable limit, and in fact, less than 0.5% of the policies were greater than 5 lakh at this point of time. So a 5 lakh limit has been presently fixed. I take your point that 5 years down the line or 10 years down the line, this limit might need to be revised. We are open to that. I am not saying that this is hard-coded in stone. 5 lakhs is a reasonable limit, very fair limit at this point of time. If it works in a better manner in subsequent years, we are open to.
Cumulative.
Cumulative. Exactly.
Per annum.
No. I'll just get back to that. If you read the FM speech and the annexures, it somehow appears that it is cumulative. I agree on that. It somehow appears in the annexures to the FM speech that it is aggregate. It is not so. It is absolutely not so. You read the memorandum, and per se the finance bill itself, it is an annual premium. Aggregate annual premium across policies is to be taken. It is not aggregate of premium across years. So that is where it actually boils down to less than 0.5%. So it is that. It is actually that. There is no confusion about that. Absolutely that.
And sir, I think most of the other questions regarding InvIT and all have been covered. Yeah. I had some questions on gaming companies, which I will take it up separately. I think it won't be of too much interest here. I think unless people say that there are a lot of gamers here who do online gaming, because there is a...
That is a positive amendment.
No, it's a very positive amendment, but I think there are, requests from the industry that I think you've done that net winnings will be subject to TDS. I think that was a very critical demand of the industry. But I think the challenges, sir, which are coming is, one is on the transition provisions, because, the original 194B is applicable from 1st April, whereas BA is applicable from July. So what happens in the interim period? How do you consolidate the two? I think that is something where the industry is looking at some level of guidance, that the transition is very smooth and there are proper transitionary provisions so that, there's no overlaps. That is one. And I think the second request has been that, sir, there are a lot of people in India, who are playing games for as low as 5 rupees, 10 rupees. And so a threshold, so for 94B, there is a threshold of 10,000. But there is no such threshold for BA, online gaming. So I think the concern which is there is that the compliance burden will substantially go up. So if we are talking about, say, 10,000, so there is a reasonable limit which is there in multiple provisions of the Act. So can there be a net winning also be 10,000? It will make things easier from a compliance standpoint. That's one of the requests which has come in. That without limit means that even on 10 rupees you are supposed to withhold tax.
I'll answer that. 194B by its very nature is intermittent and one-time winning of a game or a crossword or a race or whatever.
Right.
Online gaming is an ongoing
Constant
process.
Right.
In a single sitting, he can play 10 games and win in some and lose in some. So that is why it was essential, it was demanded by the industry that we aggregate it on a yearly basis. or tax it at the time of withdrawal from the wallet. That is how it was. The industry input on compliance was also taken. And since it is a digital platform and they all have wallets, all have wallets, and deposits into the wallet by the form of winnings are recorded, there is not so much of a compliance concern from the industry side. That is the feedback we got.
Okay.
I don't think it is going to, because nowadays once a thing is digital, whether it is an Excel sheet of 5,000 lines or an Excel sheet of 50,000 lines, it doesn't make too much of a difference in compliance perspective. That is how I analyze it. It is just that tax of more people will be deducted and smaller amounts will be deducted. That is what justifies the widening of tax base due to this amendment. That is the reason why it's been brought in.
So I think there will be some representation coming your way from the industry itself. Yeah. I think generally it's very welcome move, but I think these are some of the things they want to discuss. But we'll come back to you separately. Sir, I think just one more question, because I think in the first session, Rajiv and the other members covered a lot of them. Sir, one is that, sir, under the existing provisions, sir, when a return is processed and a notice for assessment has been issued, the tax refund can be withheld. And it can be withheld till the assessment gets completed for that year. So if the assessment for that year goes clean, then the refund has to be given back. That's the current provision. Now this section has been deleted and it has been embedded in 245.
Absolutely.
Where, sir, the reading of the section indicates that, so one is of course where there is a refund due and there is a demand, that this, by giving an intimation, this demand refund can be adjusted against the demand. The second limb which has been added, it says that where there is any refund due, and that refund could be on processing of the tax return, it could be on an appeal effect or anything like that. Absolutely. That refund can be withheld. Absolutely. For any, if there's any open assessment or a reassessment, which means for any year that money can be withheld.
I think there is some confusion in understanding. There has been no change in the substantive provision with reference to withholding of processing demand, processing refund. A processing refund, if it arises, 241A has been embedded into 245. If a processing refund arises, a notice goes to the assessing officer that whether demand is likely to arise or not. If he feels that demand is likely to arise in open proceedings, he has to take approval of his principal commissioner, record reasons in writing, and then withhold the refund only up to the date the assessment is completed. Only that open proceeding. Right. The earlier position was that if there is a refund arising out of an appeal effect of some other year. So if an appeal effect refund arises, it also suffers exactly the same procedure. The notice goes to the assessing officer. If an assessment is pending, and if that assessment is pending and demand is likely to arise, I will withhold it till the date of assessment. That's about it.
So that is not under any existing provision. Only a refund can be adjusted against an open demand.
Absolutely.
But not against a potential demand which can come in future.
There was no reason why not to do the same for a refund arising out of
any proceeding. So that's a deliberately thought through action.
The second problem which we were having is, once we withheld some refund, the second insight into this, once a processing refund was withheld, it could not be adjusted against an existing demand also. Right. Because processing under withholding under 241A
was only for that year.
Only for that year, and that refund of say 5 crores could not be adjusted against my existing demand of 5 crores.
Right.
So we have integrated them into section 245. 245(1) says, first I will adjust it against existing demand. Any balance refund, if it is arising, that I will withhold for either case.
And that assessment could be for any period.
Any period.
Right.
That is about it.
Any questions from the?
Yep. We are woefully out of time, so we can.
Yeah, sure. No, on education and health there is no change. I repeat again, on education and health, TCS on LRS has no change. It is as such. It is only on overseas tour operations and others. We have in the memorandum, if you see, go through the memorandum, it is on the India budget website. There are clearly 4 elements to this TCS thing on LRS. First is related to education, second is health, third is tour operators, and fourth is others. Only tour operator and others have changed. On the first 2, there is no change. It is categorically written in the table that there is no change on TCS, on education or health.
These many years, just get rid of your books. Probably we'll get so much of paper also, and we'll be saving the planet, maybe recycling and all, because big companies must be having huge chunk of documents, No, okay, fine, digitalization is there, but like a particular time frame.
So I think point well taken. I'm sorry, I'm just stopping. If you can.
Your take on that.
Yeah.
Uday is actually staring at me, and that is not a budget answer. I cannot defy him at this point of time.
They've been very kind, and here for a long time. So if there is,
I'll just take a minute on that. On the personal tax thing, we brought in the new regime. It has been a well thought out regime. There should be no doubt in your mind that the new regime is going to be better for most of the people here. So assess your position carefully and adopt the new regime. We've not done away with the old regime, but the old regime is presently far lesser attractive on all income slabs. I can categorically say that unless you are claiming a deduction of more than 3,75,000, if your income is 15 lakhs or more, the new regime is more beneficial. So 3,75,000, nobody here was claiming 3,75,000. So it's going to, I am just promoting that regime as a closing remark. So as the government has done, it is my duty.
So thanks a lot, gentlemen, for being there. Okay, there's a networking dinner outside. So please, if there are any questions, we can discuss it that time. Thanks a lot for being there. Thank you.